We're looking at the currency market now with Nomvuyo Guma, who is Macroeconomic Strategist at Standard Bank. Morning, Vuyo. The Rand, the review of the week, sometimes it makes a roller coaster look like a flat piece of ground. Last week it ended on 8.26. Where did it start and what happened in the week?
Good morning. Yes, absolutely. Sometimes I like your analogy. Sometimes the Rand really does make a roller coaster look like a flat piece of land. I haven't heard anyone put it better. But the Rand, actually, despite this roller coaster week, started pretty much around the 8.26 level that it closed out on Friday. So bouts of weakness there, risk aversion related to some disappointing GDP data out of China. But then, of course, the Rand improving towards the end of the week as that data then spurred expectations that Chinese authorities would be prepared to ease monetary policy further, so risk appetite came back into the market quite strongly, and the Rand managing to regain much of its earlier losses and ending the week, but pretty much where it started on Monday.
Now, we've got the MPC coming up this week. The effects of that, most economists, most people that are asked seem to think it's steady as she goes, will stay the same.
Yes, absolutely. We're not penciling in any changes in rates for this week, although we do acknowledge that the case for a rate cut has been growing and increasing. And as we look forward to the later meetings this year, I think the chances of a rate cut there, perhaps we'd be placing that at about 50-50 chance of a rate cut in September. But so far, we see rates on hold this week. We think that the MPC is going to be reluctant to act at the moment, particularly with the Rand at current levels. As always, their outlook is going to be primarily premised on the inflation outlook, and for now it doesn't seem that the downside risks that we're seeing to growth are going to be enough to tip the balance in favor of a rate cut.
Well, we've got inflation and retail sales stats. No shortage of stats coming out this week to factor in.
No, absolutely. And of course, pivotal to the MPC meeting later in the week is going to be this week's inflation data. So should there be a larger than expected drop or more benign print than expected as far as inflation is concerned, then that of course is going to feed into interest rate cut expectations, which are already quite high. I think the FRA market is pricing in an 80% chance of a rate cut as early as this month, although as I've mentioned, that isn't Standard Bank's view. But of course, the CPI data is going to be quite pivotal as far as that decision is concerned. The retail sales data, not so much. Of course, the demand side variables, in as much as they feed into the GDP number, are going to be quite important. But we're seeing a slight pickup in retail sales, so we don't think that number on its own is going to be enough to sway the MPC either way. As I mentioned, really what it would take to sway the committee at this point in favor of a cut would be a much more negative downside as far as the GDP number is concerned, and we're not quite there yet. I think we'd need a few months more data to be able to discern whether the risks to growth are as great as they seem to be.